Hello guys, sorry for the delay on uploading today's video. I had quite some issues to sort first, and now I'm not gonna have that much time to record this before leaving picking my son, so I'm just gonna try making a really quick review today just to make sure you at least have something to listen to. So we're going to cover the most interesting things and just going to set aside everything that is just following according to the plans, okay? So Bitcoin obviously yesterday has been picking up, retracing a lot of it. It's not really that big of a deal. The thing is that most of that upper shadow candle comes from Bitfinex, which is a kind of a problem because it's related to Tether, who's been dropping, which means some valuations have been reached out to, but specifically on that exchange and not necessarily on others, which means most of the exchanges have been failing that level of 6,800. So we're below resistance. We didn't break the resistance yet, even though the context remains the same, and to me is still confirming the expected plan. As it is, on a daily basis, we're creating volatility after compression, which is a good sign. We're either breaking lows and highs, but the thing is that normally, if I'm right, according to the context I'm trading currently, we should have more upside volatility than we should have to the downside, which should lead us after a long time of volatility expansion to break some of the major resistances, the daily resistances, and by breaking them, we're just going to neutralize that bearish trend. And this is how you change the perception of traders from bearish trend to slightly neutralizing and then forecasting to go bullish again. So this is the goal. This is the desert crossing phase. We're making it, and now volatility is back in the game. It's just that tether thing has been kind of pushing that momentum a little bit further, but just one single exchange have been trading it. So don't overthink things. We're just right into the expected plan, which means we're both breaking support and resistance, but we have more chances to keep on going to the upside than we'll have going to the downside. Don't be surprised if the market is reversing in a few days. We're just expecting volatility to rise. What's been compressed is now going to expand. And as long as it is doing this, and you see a market that is oscillating up and down, then we're good. As long as you don't see a market that is just falling apart and keep on doing this for multiple days, then as long as you don't have it, we're still in the expected plan, okay? Switching from compression to expansion, as long as we remain in that perspective, everything is just fine and should lead, in the end, to more bullishness than bearishness. Same thing goes for Ethereum and Ripple. Everything is just related to what's been happening recently and that volatility we just had on the Bitcoin. Anyway, it went down at a good timing. We've got weak bearish cycles and we really want them to be broken up. Now, before we go any further, I received French users' email yesterday saying, okay, Phil, this is great about that update you made on sine wave. Problem is, as we don't have it yet, it's kind of confusing if you are making analysis using it or using a tool that we don't have access to. And it was absolutely true remark. So I just follow that plan right now. I'm sorry about that. Yesterday was kind of a I shouldn't have done that. So I'm back in the usual thing today. This is sine wave 1.19, a version you all have. So we're going to analyze what you have as well, okay? So things aside, I'm still working on that sine wave and still have a lot of issues to figure out before releasing it. So until this is clearly done, I'll remain using the versions you guys have, which are absolutely working well. It's just it reminds you that the indicators are there to limit the risk, not making magical reversal trends, reversal signals or whatever, okay? And as you may have seen, they are both saying kind of the same things. So anyway, we're waiting for that weak bearish cycle to break up, and it's going to take time, and I'm really wondering to see if today or in the next following days we're going to head toward the bullish side, which I think is going to be the case, or not, or we'll just keep on ranging that price area for a bit. There's really one of the two options. Either we already made the bearish volatility and going to rise our way up to the resistances day by day, close by close, or we're just going to expand the volatility up and down in that area before switching to the upside, okay? So there is no necessity, nothing's necessarily going to be in terms of timing. It can take more time, sideways action in here, using bullish catalysts and bearish catalysts, kind of trying to digest all those informations coming into the market before slowly grinding our way up, showing that the bulls are now having things in control. Regarding other markets, Wall Street's trying to repair and trying to recover from what they've been breaking. If we go into an intraday chart basis, you'll see that basically the market is trying to break up, but it is very weak as well. We'll see if that resistance can fail. If it is failing to break, I mean, if we just try to go in here searching for 38% retracement and just retracing afterwards, I mean, as long as we don't go there, I think there is still a lot of problems in that market, and I'll just sum those information in just a single thing. To me, it's still all about Apple. If Apple collapses, all the indices will collapse. If Apple manages to find its way up to the major resistance and make new historical highs, then everything is going to be fine. It really is just about that thing. Apple has a lot of negative news coming recently, so the thing is that it's holding valuations because we still have lots of buyers. We'll see if they can hold the bearish demand. If the bearish demand overcomes, then obviously the valuations will collapse and they will drop probably 20% or at least 15%. And this is going to be nasty, as this is the most weighted stock in every indices you have across the US sector. So the thing is that everything's about Apple. And it pretty much is impossible to figure out what's going to be at play. Yesterday was a bearish day, today kind of a neutral day. So we still don't know what to figure out with that thing. And as long as it is that way, you don't want to be overtrading. It really is dangerous, 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 dangerous. Don't get your fingers cut in here. It's just... we'll see if that breakup is managing its way up. We clearly have a breakup area in here, low volume, and we'll see if it goes to this way or not. If it fails and goes down again, clearly this is where the nasty pot will trigger. So obviously, if Wall Street goes there again, I'm going to be bearish and not a little bit bearish. I'm going to go leveraged on the indices and especially on the NASDAQ. Meaning I'm going to take additional entries, not big entries, but probably tripling the current exposition, which means probably going to leverage 2. So it's not that big of a leverage, okay? I'm not going to go fully leveraged. We might have a volatile market, which means you don't necessarily need to be leveraging 4 or 5. If I'm right, and if we go there and drop 10 to 15%, a leverage 2 in here is more than enough, clearly more than enough. Currently, my entry price is in here. Okay, I've been taking some cash out of the market, so I do have free cash to add some short positions in here. I'm just waiting for the market to make a decision, either breaking that resistance up, and probably we're going to try grinding our way up to that previous bottom, in which I think I'm going to try a bearish entry upon signal only, of course. But if I do have double bearish in here, I'll be pretty nasty confident to short that market again. We're trying to recover at the current time, so we'll see how long this can last. But to me, it seems seriously bearish at the current time, and it all relates to Apple. So that being said, you just have to wait for this to play its game. Apple's going to make a decision. It's the only tech that hasn't been surrendering the gains so far. Well, even Amazon has been surrendering the gains. So look at Amazon. Okay, we're pretty much 15% off the market top at the lows. Okay, Apple hasn't done anything like that. I mean, Apple is just 7% out of the market top. So if it goes down, probably is the latest tech to just drop. It's got no reason to go higher. I mean, everything's bearish regarding Apple. We've got recent news that the Chinese user is using less iPhone than expected, and as the growth might be questioning in the Chinese area, also as well, it could be very, very nasty for Apple. So things are, we've got the signals, we've got everything regarding the patterns to trigger the crashing pattern. We just need the trigger. okay? It's just something is going to pull the trigger out there, and then there's going to be a lot of blood. It's just before it happens, you really need to have this thing triggering. If you press the button too early, you're going to be wrong-footed, and it's going to cost you a big loss, an unnecessary loss. It's really way too early to consider that thing over yet. If we manage to make that dip and go search for the higher highs, then we're going to have problems. If we fail in here, stays there, kind of make a few days close in here, and then drop, this is what I like to see. And if it drops, it's going to drop hard. Okay, so for now, we wait for further informations. Apple looks very weak. If it falls, everything falls. It's just, as long as it hasn't, there is still uncertainty, and regarding uncertainty, you know how to trade that. You don't put leverage. Leverage regarding and facing uncertainty is the worst possible job you could do. So wait for this to come and be patiently be patient. If it has to be triggered, you know what to do. You don't have to hesitate. If Apple falls again and make a daily candle close below 12, let's say 110, it's the end of the game. It's going to collapse. Second thing we need to talk about today is AUDNZD. It's been breaking two lows, and obviously yesterday I said on Twitter I'm narrowing my exposition to NZD because of the upcoming catalysts that we had throughout the night, and the fact that I saw the market weren't trying to anticipate. What I'd like to see would have been, at that point, the market heading toward resistances instead of heading towards support. So when I saw the market heading towards support, I said, okay, problems are ahead. I think the market is going to drop. So I narrowed my exposition to to NZD by reducing the leverage I had on AUDNZD, basically. So now that has been done, of course the market is low, but I don't think the market is bearish. I just think that market would just digest those bearish catalysts and go higher again. It's just that for now, in a daily perspective, I want to buy something near those prices, but I'll wait to have a signal. I cannot buy something like that. So I'll wait for tomorrow to hope for stabilizing, kind of a doji candle if possible, and I'd like for a bullish engulfing the day right after to put back that leverage in the market. So I remain bullish on AUDNZD. I remain bearish on NZD yen. The question is, facing the underlying short-term risk of those catalysts, I wanted to reduce my exposition to that market, so I just took some money off the table. But in case of the AUDNZD, it was taking partial gains, okay? So it was taking a gain just to be able to put that money back in the market with better prices slightly later. So I'm now waiting to have further information on that market, taking some money off the table, and now the question is where and when should I put it back in this currency pair that I still have a bullish conviction on. It's just that right now 4 and 5 is no longer possible, so we're back to 3 and 5, and obviously it has to be coming with reducing the leverage. So we're kind of trying to find a way, finding a support in here, and it's basically we're traced back in 2 waves in here. I thought this was 2 waves already, which led me to believe that this was potentially bullish, and these are the reasons why I was ready to trigger a bullish breakout trade. It failed. We failed to break up. We tried 3 times in a row, failed 3 times, and apparently the market shows us the downside. Doesn't mean we're going to go crazy low. To me, the stop is in here. If we go there, problems, really a lot of problems. It means that market is not bearish and is just keep on ranging. But I think the market is bullish. It's just this NZD catalyst has been slowing down the pace, offering better prices, but I still think the bulls are in control. And here they're just waiting for this to just play its game, and whenever it's terminated, bulls will be in control again with very attractive prices. So I expect this to happen near those prices. You basically take a retracement out of the previous impulse, and we generally search for standard retracements. So I always made that mistake. So this is basic, yes. So in terms of basics, we can trigger something to forecast 76.4% retracement. So maybe a little extension tomorrow to go below those levels, finding those interesting prices, and upon signal only, daily reactivation. I mean, I want the market to stabilize in here and make a bullish engulfing pattern. Whenever that will be the case, I'll have the bullish momentum to follow through, and obviously I'll put the money back in the game and do trade that breakout, obviously. So whenever the market goes back to that resistance, it would be 3 times failure. Obviously the 4th time is going to play its game and break through it. So this is where I'll go fully leveraged, but until then still needs to remain lowering the leverage and patiently waiting for the timing to come. So the market has failed to give the timing. So as long as it is that way, you don't want to be the guy who is too aggressive, especially when you do trade with leverage. So I had to reduce because of that underlying impending risk. So we're just finding for a lower low, and it still remains a 1, 2, 3, 4, 5 structure, which is a leading diagonal. And it's just probably going to lead us there, and then tiny pullback, and then we're going to have the bullish waves. I remain bullish. Still think we're going to have 5 waves to the upside, 3 bullish waves and 2 consolidation waves. So we're apparently still building the second consolidation wave, and apparently the 4th point isn't found yet. Until we manage to find this one out, we're basically creating an expanding diagonal. Okay, so we've got wave 2 and 4. It's going to be divergent. Okay, so consider it that way. We've got 1 and 3 and 2 and 4 diverging. Okay, I thought we would have them converging in the first place. It isn't the case. So we're going to diverge, probably going to retrace 76.4, which is the standard retracement when we do this kind of pattern. So finding some kind of support in here is now the new plan. Any other currency pairs are just waiting at the current time. I think euro-dollar is just ranging. GBP/USD has been finding the bottom as expected, so it's great. Euro-yen, I remain slowly bearish leverage, waiting for this to play its game until we manage to find the bearish breakdown. So I remain low leverage until we get the bearish breakdown to occur. Same thing goes for USD-yen. We're trying to stabilize in here, but I expect some more bearishness to come. It's just a matter of yen, and the yen is obviously going to play according to Wall Street. So if Wall Street manages its way up, and if Apple is out of trouble, we're going to probably have a pullback in the yen. If Apple is showing some bearishness as well, I think yen is going to surge as well, and we're going to head right to that resistance in a straight line. Okay, same thing goes for VIX, same thing goes for the bond market. So I see that today German index is recovering, but for some reasons the bond market is falling. The bond market is rising as well, which is not a good sign. We cannot have bullish bonds and bullish equities. So this is a problem in here, at least not in that context. It's not normal to have this. So I think something is wrong in here in the way the market is pricing currently, which means it leads me to believe that still some problems ahead, and that Apple is still hiding its game in that problematic situation. So we'll see if I'm right or wrong. Obviously, if Wall Street just flushes out all the risk as it used to be doing recently, it means that we're still in a wave 4 kind of scenario. Let me just highlight it with a chart. If this is what's about to come, I mean, if Wall Street manages its way up back to the previous resistances and goes to retrace up there, then basically it means that we're in a wave 5 situation, a wave 4 situation, kind of something that we had in here, which means we're not breaking supports, we're just retracing brutally to those supports, not breaking them, and going to try and make higher high afterwards. Second option, this is a wave 1 situation, totally different context than this was, and obviously everybody thinks we're going to trade that way. Okay, so everybody think that we're going to make a bottom in here, and that's going to be the low, and that we're going to make new highs afterwards. That's a possibility. Problem is, if that's not the case, if this is a wave 1 and everybody is wrong, then obviously we're going to take down some stop losses below those supports, which means we still have some downside potential. For now, we're still ranging the 200-day average, which is obviously a scenario that I've been telling you about. We're going to spend some days in here. We're going to range up and down, but as we're up today, I think tomorrow it could just be down. We're just going to be ranging that price area. All I care about is for us not to retrace. So all I want is not that market to build a bottom in here. I want the market to go sideways until it finds some new bearish catalyst with more strength to go to the downside, triggering all the stop losses of the stupid bulls who will figure this out as being a buy the dip situation and go wrong. Because that's how it goes. I mean, the market is buying the dip for quite some time. It's buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. At some point, it's not going to work. You know, the trend is your friend until it reverses. And whenever it reverses, it always happens at some point. Meaning the bulls taking too much risk buying the dips. At some point, they are not buying the dips anymore. I think we're nothing close to that kind of situation in here. Look at the volume, really historical volume on the SPX. So if this is a buy the dip, I mean, really, the next spot is going to be fucking bullish, but I don't think this is nearly close to being the case. Look at how much volume it took us the last time to just make 3% above the market top. So if this is clearly a wave one like I think it is, we're going to have more bearishness. We're going to go slightly below those lows just to fuck up some stop losses and then eventually going to retrace. But still problem with Apple. The gold, I've been taking partial gains below that resistance because we're trading the target of that bullish breakout. I still forecast the price to go higher, but we could have a range in here, so I took 25% off the table on the gold. It's just to pay for some gains, so to pay for the previous losses. So I'm now even on the goal regarding the losses I took, the speculative losses. Now it's off, so I paid for those losses. It's only a gain right now, and obviously I'm ready to get that money back in the market if we do retrace, but there is still a risk. So you can see this could be just a wave 4, an A, B, C correction, long correction, and if we were heading to more downside, I obviously want to pay for the previous losses. Okay, and if it goes down, then I'll be off with no losses, and I'll just have tried hard to do something with this goal. But there is still some underlying risk that this could be just a range breakout. So be aware that I still have a lot of conviction that this goes to the upside. This is why I remain 75% in the market. But pending that short-term risk, I want to see how the market reacts in that area. Uncertainty, so money off the table. That's it, basically, all I had to say. I'm going to make it quick. So the way it is currently trading still suggests, and I'm looking for that rotation to kind of occur, and I think Apple is the one that is going to trigger this. It's the latest growth stock that has been kind of holding for stupid reasons originally. Once this one falls, will be great, and basically we'll say the market will have the signal at once that it says that there is no growth to pay for anymore, at least not at PE ratios above 15. So the market is then probably going to switch looking for value stock, like I said. But as so far that rotation is really not working well, I'm still figuring out if we're wave 4 or wave 1 kind of trading right now. I still forecast wave 1. If I'm wrong, obviously I'm going to have to give away all the gains I have in the market. I will still have taken some gains. This is why I took the money on the SPX. I took partial profits as well on NASDAQ, okay? Once again, same thing. Basically paying back all the previous speculative losses, taking some additional gains, and if things are going wrong, and if I'm wrong with the context, then I'll just give away all the gross profit I have right now. And that will be kind of a loss because I got pretty huge growth profit at the current time. I just lose them, okay, if I'm wrong. So that's no problem. Losing the gains is nothing it's possible. What I would like instead is for the scenario to trigger, so I'll have to double those gains and take some reinforcements and get into the actual profit making in that scenario. Okay, so remains to be seen. So still highly speculative at the current time, so no leverage. Even though you can have the strongest conviction, you need to remain following the plan, following the strategy and the money management as well. So things are in motion. pretty much according to the way they should be. So as long as it is that way, you still want to remain pressuring to the downside into Wall Street's indices. But currently we're trying to retrace. So let the bulls play their games, and what we want is their stop losses. Okay, we want them to try buy the dip, and then we want to see the market falling and triggering all their stop losses at once. And as they will change their psychology, we're gonna take the gain. This is the goal of wave one. Fucking the bulls, which still play the trends. They're gonna take their stop loss. First one in quite some time. They've been buy the dipping 10 times in a row. The 11th one is not gonna work. This is where they're gonna take a stop loss, and this is where we're gonna take a nice gain. It's just how the game plays. The bulls are trending. They've been trading for a long time right now. At some point it's going to fail, and I think we're approaching that current timing. So those who try to buy the dip, if you are one of those, then be aware that you should put half the usual leverage on this one, because you've got slightly more probabilities to be proven wrong. And obviously if you prove me wrong, then I'll just surrender the growth gains I have currently. That being said, forex market remains patiently waiting for this. You know everything. I don't have time to take your questions. I'm just going to have a look at them. If they're just a couple ones, I would just take them. Otherwise, I'll have to leave in just 5 to 10 minutes. So massive trap on the cryptocurrencies, that's possible. But anyway, it's volatile. So yes, obviously you don't play FOMO. I was really clear about that. There is no speculation to make on that market. It's going to be volatile, so tricky and trappy. But the thing is that this is why we made buy and holds. Okay, so buy and hold and the short-term volatility is none of your concern. And as I said, if you are adding position sizing because you FOMO trading, you're doing it all wrong. So you just took that buy and hold, or not, depends on what you wanted to do. But if you took it, there's nothing else to do right now. Wait for the volatility to play its game and shift the prices to the upside, slightly more to the upside than to the downside, and slowly, bite by bite, you'll see the bullish trend reactivating itself, slowly grinding its way up. Yeah, it basically is tether problem. We clearly see this. I didn't see it back then. It's basically, I don't really care of the news. It's just I saw that on the charts. I was expecting this, so I didn't search for information to confirm this. Generally, the catalysts are just there to push the price according to the plans. So as long as it was playing that way, I just didn't figure it out. So just don't try to understand things. Sorry. Even if it looks totally FOMO, FUD, or whatever how you call it, it's according to the plan, so you don't change a damn thing in here. You just wait until it manages to find its way up to the major resistances that we wanted to break. As I said, there's nothing to trade until we get to 8,500. We're still far from that price, tether or no tether, so you just wait for this to come or not. Bye guys, trade safe, and always remind to be making cold-blooded decisions. Be aware that you do need to check the 3 steps before pushing any fucking button. Either it's on cryptocurrencies or whatever this is. Even if there is a strong news flow, you don't trade regarding news, okay? It's not because everybody is telling you this is FUD or FOMO. You don't press a button because of a news. You press a button because something has changed regarding your context, and in this way you're going to reduce the leverage, eventually taking partial losses. If things are still playing as according to the plan, you just let it go. All right? Bye-bye, guys. See you tomorrow.